Body's YouTube channel by Testbook. Today, I welcome you all in class 6 of practice session for your RBI Grade B Phase 2 examination. In this particular session, we are discussing the most important MCQs based on finance. As you all know, this session is live Monday to Saturday, where we discuss finance based MCQs on Monday and Tuesday. Then ESI based questions are discussed on Wednesday and Thursday, and on finally Friday and Saturday we discuss the management based questions. I'm pretty sure you must be attending this session on regular basis and you must be learning great new things while attending this session itself. So today it's class 6 of the same session, of the same series, where we are going to move ahead and we are going to discuss many more questions of the same. So before I begin the discussion, may I have a reply in the comment section that I'm audible, visible, everything is fine, we are good to go. And along with that, I would request you to please copy the link of this session, share it with your friends so that more and more students, they can join us live. And this session is going to be really very important for all those candidates who want to learn as well as clear their concepts related to finance, because I'm not only solving the questions, I'm discussing each and every question with you, and that too in much detail. Pretty sure that this is going to help you a lot. So let's get started with the finance for RBI Grade B 2024. This is RBI Grade B Phase 2 Finance Complete Practice Batch, obviously by Madhav. So let's get started. Here we go with the first question of the evening. What does the first question says? Read the question very carefully and then I'll explain you the question and we will be answering the question in the same rhythm. The first question says, which of the following condition arises when the expenditure of a government is more than the revenue generated by the government in a financial year? So the question says, what kind of situation arises when the government expenditure is greater than government receipts? What will be your answer? See, we know this very well. Whenever we talk about government expenditure and government receipts, we know this very well. Whenever the government expenditure is greater than government receipts, that is a situation of deficit. That is a situation of deficit. In that particular case, for the given financial year, if I'm talking about the total expenditure done by the government and total revenue generated by the government, so they are using total expenditure and total revenue generated by the government. When they say total revenue generated by the government, that means they are not including the borrowings, because borrowings are not actual revenue which is generated. It is just the part of total receipts. It is just the part of total receipts. But the question over here is, following condition arises when the expenditure of the government is more than the revenue generated by the government. The moment you read the word revenue, over here, you must be confused. That's whether I go with revenue deficit or I should go with fiscal deficit. That is an important point which you need to understand over here. So please pay attention, guys. Please pay attention. The revenue word over here is, they are basically talking about the funds which are raised by the government. They are not specifically talking about revenue expenditure and revenue receipt. What they are trying to say is, total expenditure done by the government is more than the revenue generated. Revenue generated means in the receipts we are excluding the borrowings and we are talking only about the actual revenue which is generated, and that is basically known as what? That is known as fiscal deficit. See, we have budget deficit, which is nothing but total expenditure minus total revenue. And generally the budget deficit is made zero because government tries to raise the funds through borrowings in order to match the expenditure in its revenue side. Then we talk about fiscal deficit. So fiscal deficit is total expenditure minus total receipts, but out of the receipts we are excluding the borrowings done. Then we have primary deficit. So primary deficit is basically what? So this is fiscal deficit minus interest payment. So fiscal deficit minus the interest payment done by the government in that particular financial year. Then we have revenue deficit, which says revenue expenditure minus revenue receipts, and finally we have effective revenue deficit, which is basically revenue expenditure minus revenue receipts, and in case of revenue expenditure, we will be excluding that expenditure which has been used to raise, or which has been used to generate capital, asset. So from the revenue expenditure, we will subtract the I would say grant given to the state government for capital asset generation. We'll exclude that and we'll receive the effective revenue deficit. If someone asks you what is twin deficit, if this question is asked what is twin deficit, then your answer should be twin deficit is nothing, fiscal deficit plus current account deficit. Got it, guys? Clear? You might have learned something new. Good evening Kajal, good evening. You might have learned something new. Moving on to the next question. So the next question says, let's check out what does the next question says. The next question says, which of the following is a type of loan that has low initial payment but requires the borrower to repay the balance in full in a lump sum part? So basically we are talking about a type of loan in which in the starting the initial payment is pretty low, and later on we pay the entire balance in the lump sum form. We call that type of loan as balloon loan, or we call it as balloon payment, or we call it as balloon mortgage. Remember that balloon mortgage is basically a real estate related loan. And whenever we talk about real estate related loan, these are the loans that have a very low initial payment, but they require the borrower to pay lump sum amount in the near future. So they have very low, or maybe in some cases no monthly payment, and at the end of the loan tenure they need to pay, or the borrower need to pay the full balance in lump sum form. So the monthly payment, if any, that could be only and only interest, and that is pretty low, and the entire amount is going to be paid in lump sum form. Remember that it have short-term advantage but can be risky for homeowners as well as the lenders alike. So that is the reason it is generally utilized in case of short-term lending which is done against real estate. Got it? Clear? Moving on to the next answer is going to be balloon payment. Moving on to the next question. Which of the following is the accounting technique used to periodically lower the book value of a loan or an intangible asset over a set period? It's a good question. Yes, this class is for RBI. It's a set question and it's pretty easy. Try to understand this point. So which of the following is accounting technique used to periodically lower the book value of a loan or an intangible asset over a set period? What does it mean? For example, if you have borrowed a loan, against that loan, if you are paying a regular payment, let's say you are paying a regular EMI, and this EMI comprises of principal as well as interest, and on this regular payment, the principal is deducted out of the outstanding amount, out of the outstanding value. So in that particular case, the book value, that is the outstanding value, is decreasing. So that process is basically termed as what? So this technique is basically known as amortization. So accounting technique which is used to periodically, I would say, lower the book value of a loan or an intangible asset over a set period, that is known as amortization, and it is typically expressed in a, I would say, straight line basis. It is typically expressed or expensed in a straight line basis. So it is an accounting practice which spread the cost of an intangible asset over its useful life, and in that particular case it can be used for intangible asset as well as for the loan. So for both the cases we use the term amortization. Got it, guys? Clear? Got it, guys? Clear? Shall I move ahead? Okay, moving on to the next question. What does the next question says? The next question says, which of the following window for a bank to borrow from RBI is an emergency when interbank liquidity dries up completely? We know that if bank is in a need of funds, obviously bank can borrow from other banks, which we call it as interbank borrowing in call money market, with the help of call money bill or notice money or call money. Now the question over here is, if the interbank credits or funds are not available in the market, and in that particular situation, if a bank is in need of funds, in that particular case, bank can borrow the funds from RBI with the help of what? Sir, obviously bank can borrow from RBI through repo rate, but generally I would say the limits of repo rate are pretty low, and once the repo rate dries up, then bank prefers for call money bill or notice money. But once there is no other option, repo rate is not available, call money or notice money is not available, then bank will be paying higher rate of return. Bank will be paying higher rate of return, and that higher rate of return through which bank raises the funds without any security. Bank raises the funds without any security from RBI at higher rate of return or interest, that is known as marginal standing facility. That is known as what? So that is known as marginal standing facility. Got it? Is it clear? Kajal, I would say partially yes, partially no, because few of the questions this time in your UGC NET examination were directly related to the level of RBI finance questions, but all the questions of that level, I'll not say that. But if you're attending this session, you will be learning new about one of your unit, that is money and banking, which will help you to answer those questions. And this time the weightage has increased by the examiner in the UGC NET examination, so you can attend this session as well. So answer is going to be E option, that is MSF. Moving on to the next. The next question says legal entity identifier is a dash unique global identifier for legal entities which are participating in financial transactions, and its purpose is to help identify legal entities on a global accessible data. So legal entity identifier is basically a unique global identifier of how many digits, which basically provides a legal entity to an organization while making the financial transaction on the global level. So this legal identity identifier is of how many digits? Or it is a unique code of 20, or it is a 20 unique digit or 20 digit unique code, which basically identify the parties in a financial transaction. Banks, they should encourage the borrowers or the investors or the participators to receive or to apply for these legal entity identifiers so that they can be allowed to make huge transactions not only on domestic level but on the international level as well. Clear, guys? Clear? Moving on to the next question. The next question states that which of the following is a new financing trend where banks shift their investment strategies to focus on substantial technologies and environmental friendly initiatives? So when bank tries to focus upon environmental friendly initiatives, that type of initiatives or that type of banking operation is known as what? So that is known as green banking. If I give you a very simple answer for this, paperless banking is an initiative of the banks to achieve their green banking targets, where no paper is going to be used in day-to-day bank transactions, and that can easily be included under the category of green banking. Along with that, banks, they are using n number of technologies, such as banks, they are installing solar power panels or rooftop solar panels in order to utilize the electricity produced by the solar energy in order to avoid their dependence on non-renewable source of energy. Got it? So answer is going to be green banking. That is correct. Moving on to the next question. The next question says which of the following is the general decline in prices for goods and services, typically associated with a contraction in the supply of money and credit in the economy. So basically, what does it say? It says that, so whenever price of goods and services decreases, and they decrease because of decrease in money supply. So we know this, when money supply decreases, it results in decrease in demand. Supply cannot be decreased simultaneously, which will result in decrease in price, and this results in what? So this results in deflation. This results in what? Deflation. So what is stagflation? Stagflation is basically a situation where inflation rates are high, along with that unemployment rates are high, and not only unemployment rates, along with this we have low liquidity in the market. So this kind of situation is termed as what? So it is termed as stagflation, and Phillips curve do not satisfy the stagflation part. Got it, guys? Clear? Crystal clear? Chalo, let's move on to the next. Let's move on to the next point. The next point says, which of the following is a forward contract where one stream of future interest payment is exchanged for the another based on a specified principal amount? It's a good question. So out of the following, what or which of the following, what is skimming? Okay, I'm sorry, I have not discussed it. I hope you know the other terms. Inflation is clear, stagflation is clear, insolvency is clear. Now the question is, what is skimming? Skimming term has nothing to do with inflation or deflation part. It's a term related to cyber security. And what is the meaning of skimming? Try to understand this point very carefully. Skimming basically means a practice. Skimming is basically a practice in which information is removed or information is achieved. Information is achieved through illegal means or through malpractices. If I give you a very simple example for this, let's suppose you have a debit card, okay, and you went to the ATM machine and you swipe your debit card, enter your personal identification number, that is your PIN, and you withdraw the funds. Unfortunately, you were not aware that in that same machine, in that same ATM machine, I have inserted a case, and that case is capable of copying the information. Means the moment you have inserted your card, the information stored on your magnetic strip will be copied in that device. Once you leave the ATM, I'll remove that device from the same slot where you have inserted your debit card in the ATM machine. I'll remove that particular device, and in that device I'll insert a card, or I would say an empty card, and I will paste the information which I have retrieved from your card. Now I have clone of your debit card, and I was standing behind you when you were entering your PIN number. So I inserted the card, enter the PIN number, and I've withdrawn the entire amount in your account. So this is known as skimming. Skimming basically means when the information is removed. When the information is removed from the upper layer, the same in case of your magnetic strip, the information is removed from the upper layer of the magnetic strip, which will help to withdraw the funds or which will lead to bank frauds. That is known as skimming. Got it, Kajal? I hope it's clear now. Moving on to the next question. Which of the following is a forward contract? So forward contract where future interest payment is exchanged for the another. So whenever there is a exchange in terms of interest rate, that means we are paying the interest rate. You will be paying mine, I will be paying yours. So that is lightly कोई work करना नहीं. I think now it is clear, Kajal. इसका मतलब ही बिल्कुल अलग है. I think now it's clear. So interest rate swap is a situation. Interest rate swap is a situation where one stream of future interest payment is exchanged for the another They can exchange fixed or floating rates to reduce or increase exposure to the fluctuation of interest rates. So in order to overcome your interest rate risk, you can go with interest swap agreements, which is a part of derivatives, which is a part of forward agreements. What is the minimum short-term finance repayable on demand with a maturity period of 1 to 14 days or overnight to a fortnight? Okay. So what is the minimum short-term finance which is repayable on demand with a maturity period of 1 day to 14 days or overnight to fortnight? Give me the answer. Give me the answer. What will be the answer for this particular question? It's an easy question. I'm pretty sure you will be able to answer this question. So whenever we talk about these questions, if we say term money, it is for more than 14 days. Letter of credit, more than 14 days. Cash equivalent means which can be converted into cash whenever required, but the condition of 14 days is not appropriate. Plastic money is basically used for plastic currency, debit card, credit card, that is not appropriate. The one we have is call money. Call money, or I would say call money bill. Call money bill or call money market uses two types of bills. One we call it as call money, other we call it as notice money. Call money is actually valid for overnight or 1 day, and notice money for more than 1 day to 14 days. But in general, we can include both of them under the category of call money only, and on that particular basis, the answer to this particular question is going to be D option, that is call money. Next, which of the following is the privately pooled investment fund in a form of trust or a company or a body corporate or a limited liability partnership? Or a limited liability partnership. So which of the following, go through with the question guys, which of the following is privately pooled investment fund, okay, in the form of a trust or a company or a body corporate or a limited liability partnership? That type of fund is known as what? That type of fund is known as what? So that type of fund is known as alternative investment funds. So alternative investment funds, they basically refers to any privately pooled, investment fund, whether from Indian or foreign sources, in the form of trust or a company or a body corporate or even the limited liability partnership, that is LLP. Remember that it does not include funds which are covered under SEBI Mutual Fund Regulations 1996 or SEBI Regulations 1999, which is called as Collective Investment Scheme, and any other regulation of the board to regulate fund management activity. So in India, they are private funds and they does not come under the jurisdiction, so they are termed as alternative investment funds, AIFs. This is really very important to remember and understand. Moving on to the next question. What does the next question says? The next question says, which of the following is an account that a bank holds with a foreign bank in the currency of country where the funds are held? So we know this very well. Let's try to understand this point. We have US. In US, we have a bank named X Bank. Then we have India. And in India, we have a bank named Y Bank. Okay. Now, my reference point is India. This is my reference point. Now, if Indian bank, that is Y Bank, is opening up an account in X Bank in US dollars, we call it as our account with you. Our account with you. My reference point is India. Second point is if this X bank is opening up an account with Y bank in India, in Indian rupees, then we'll say your account with us. And third point is if I'm referring to Pakistan and Pakistan is saying your account with them, Pakistan is saying your account with them. So your account with them stands for LORO, LORO, LORO account. Your account with us stands for your account with us stands for your account with us stands for Nostro or Vostro. Our account with you stands for, what will be your answer, guys? Give me the answer. Any idea? I have discussed this n number of times. Okay. Escrow accounts, it has nothing to do with this discussion. Escrow account basically means an account which is opened up by the two parties who have been into an agreement, and this escrow account is offered by the third party which act as a guarantor in between the agreement which has been done by the two parties in order to safeguard counterparty risk. But the answer to this particular question is going to be Vostro or Nostro. Give me the answer. I'm still waiting for your reply. So the answer to this particular question is going to be what? Sir, it is Nostro account. Why Nostro? As I have clearly mentioned, your account with us. Your account with us. So is an account that a bank holds with a foreign bank in the currency of the country where the funds are held. So our account with you. So if I consider reference point as India, so it's saying an Indian bank is holding an account with a foreign bank, that means with a bank in US currency. My reference point is India, then it will be termed as what? It will be termed as Nostro. So NO, remember Nostro, NO, it starts with O, our account with you. And in case of Vostro, we have your account with us. In case of Vostro, we have your account with us, or our account with you is Nostro, your account with us is Vostro, and their account with them is known as LORO. You need to remember all these terms, it's clearly mentioned. Clear, guys? So this means our account with you. Moving to the next. Which of the following is defined as an account that a correspondent bank holds on the behalf of another bank? Correspondent banks hold on the behalf of the another bank. Correspondent bank holds on the behalf of the another bank. What will be your answer? It's a good question, and I would say it's an easy question as well, but you need to identify this. Which of the following is defined as an account that a correspondent bank holds on the behalf of another bank? So SBI is holding an account, and this account belongs to another bank, and that bank is in another country. In that particular case, we can use a term Vostro account. It must be given more clearly, but if this much information is given, then also we can say correspondent bank holds on the behalf of another bank. Latin word is your. So therefore, Vostro account implies your account with us. So if the correspondent bank is holding the account of another bank, then it will be termed as your account with us. Partnership in which bank and insurance companies come together, wherein the bank sells the tied insurance company's insurance products to its clients, is known as what? So when banks sell out the insurance, services, or I would say insurance policies to its customer, is basically termed as what? So it is basically termed as banca assurance. So banca assurance is a type of agreement, it's a type of collaboration in which bank sells insurance services on the behalf of insurance companies in order to earn commission as a commission agent. That is known as banca assurance. We have different models: broker model, referral model, as well as client model. We also call it as corporate model. So these are the three models which are used under the term banca assurance. Moving on to the next point. The next question says how bank rate is different from repo rate. So it is very much different. How you can say it is very much different? The answer is Bank rate is the rate which is charged by RBI against long-term lending done to the bank. Repo rate is the rate which is charged by RBI against short-term lending done to the bank. So in this case, while repo rate is a short-term measure, bank rate is a long-term measure. Bank rate is short-term, while repo rate is used to control money supply. Bank rate is used to control inflation. That is not true. While bank rate is used to control money supply, and repo rate is used to finance government debt. While repo rate is used to control money supply, repo rate is long term. No sir, difference is simple. Repo rate is short term, and if I say bank rate, it is long term. So according to me, answer is going to be A option. That is correct. What are the prepaid payment instruments? Prepaid payment instruments are the instruments where first you load the funds in those instruments, and then you can utilize those instruments to make the payments on different places. What are the prepaid payment instruments? First, method that facilitate purchase of goods and services. Okay. Prepaid instruments can be issued as online wallets, mobile accounts, mobile wallets. That is true. Prepaid instruments make discount on online purchase. They will make discount on online purchase every time. That is not true. But yes, these are the methods which help us to purchase goods and services. So I'll go with 1 and 2. You will get discount. Yes, you generally get discount, but you always get discount. That is not true. So answer is going to be first, method that allows you to purchase goods and services, and it can be witnessed in different forms. Which of the following were the objectives for the priority sector lending? We know that RBI introduced priority sector lending with the motive of financial inclusion, as well as provide loan to all those sectors which are generally ignored by the commercial banks, which include agriculture sector, weaker section, social infrastructure, green energy infrastructure, MSMEs, many more. First is to ensure easier credit availability in rural areas. It is only for rural areas? No. To enable banking and financial inclusion in the neglected regions. That is true. To ensure greater creation of jobs. That is true. To develop entrepreneurial abilities. That is true. To ensure easier availability of credit in rural areas only. They have not written a word only, na? So if they have not written the word only, obviously this method results in easy credit creation availability in rural areas. So A, B, C, D, all of them are correct. If they would have mentioned only, then I would have excluded the term, or I would have not gone with the first statement, but they have not used term only. So answer will be all of them. 11th 5-year plan of India is for 5 years ranging from. So in 2017, if I'm not wrong, was the last plan, which we call it as 12th 5-year plan. So 11th 5-year plan was from 7 to 12. 12 to 17 was the 12th 5-year plan, and after that Niti Aayog has been introduced and Planning Commission was replaced by Niti Aayog, and 5-year planning practice have been stopped in India. So the answer to this particular question is what? 2007 to 2012 or 2006 to 2011. What will be your answer? Is it 6 to 11, 7 to 12? It's 7 to 12. Very good, Kajal. So answer is going to be what? C option. So I hope all the questions which we have just discussed are crystal clear. If you want to clear your RBI examination, do subscribe to our RBI Grade B 2025 Lakshya batch in order to ensure short selection. Thank you so much. We'll catch you in the next session. Bye bye.